Alright, I'm live again. Sorry about that, guys. I have no idea what happened, and I'm not quite sure when it stopped, so let's go ahead and take a look. Okay, I'm just gonna have to do this. Hold off this week to buy up the dollar's demand diminishes because it would be coinciding with appreciation in assets because those dollars start going into assets, making the dollar supply less on demand, making the dollar supply less on demand. All right, here we go. Making the dollar supply. So, all right, first of all, let's just go cut. All right, so sorry, stream cut out. So I am going to turn this into a video also. So, boom. Sorry about that. Here we go. So making the dollar supply less in demand as the dollars go into risk assets, and we see a mega pump, hopefully, for risk on assets such as Bitcoin, the stock market, all that good jazz. Now, with the stock market, we're going to go ahead and go over to the Dixie, and we're going to look at my video on the Dixie, and we're going to see what I said there. Sits still and then goes. But once the capital starts flowing, I see no reason why the Dow Jones would. Why would it be bearish? Why would it be bearish? Let's go to the Dow Jones and see why it would be bearish. All right, so first I did this, right? Is that what I just did? Oh, I need to take that off. Bang, 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 bang. Is it this? Is that what I was looking at? What was that? Am I on regular scale in that video? I wonder if that matters. I don't know. Pop up. Boop, boop, boop. Down, up. Boop, boop, boop. Down, up. Right? Yeah. I think that's it. Yeah. And then look, we bounced off. Come up. We're setting higher lows. We're good on the weekly. People looking at the daily need to stop. This is an indice. It's big. It moves slow. Slowly. All right, let's go back to the video. I said, all right, maybe we get this pop up. And then what do? We got this down trend, which was this right here, bouncing off of that trend line right there. So you can see we got the 1, 2, 3 bounce off, come down, and then come up, then come down, come down, and then come up, and that is the next phase that I could see us working on. So, and this is where I said so if we go back to the Dixie, I just need to go ahead and get that another, or maybe I should just double this up. Let's see. Let's close this first of all. Well, that's not what I wanted. I want change the layout. Let's go side by side. And so we've got I really want the Dixie on this side, and get the Dow on this side, get rid of the RSI, make sure we're both weekly. All right. I don't know why I have apply these indicators to the entire layout, settings. I'm gonna go to apply defaults. Oh, get rid of that. That's not what I meant. Oh no. Okay. It's really gonna do that to me. Wow. Alright, we're just gonna act like that didn't happen. Alright. Let's see if we can change it up on this one. Let's go. Alright. Apply these indicators to entire layout. Settings. Nope. Apply to all. There we go. Take off of XRP. Put this on the Dow Jones. There we go. Put this on the Dixie. There we go. Now this could move up quicker than we can imagine, but this is still September, late September, which, you know, I've been saying late September, early October, going into October, maybe even mid-October to November. Somewhere between these 3 months, September, October, November, is when this thing is going to start cranking up, I think, in my opinion. We'll see. But once this dollar gets up to here and takes out the fair value gap, it should move its way down, shift its way down. So we go back to the video. We can see this start to move up. And what are we seeing? We starting to see it move up. We're putting in higher lows and higher highs on the weekly chart at least, as we are marching up to the upside. While this is marching up to the upside at the same time, but if you see this right here, this drag down, you look over here to the left, and ever since Fed now, we've kind of rounded off and pulled back on our stock market. And then we get a sell-off of the dollar, and then at the same week, we have assets get bought up. Now this could roll back over down to here and even go lower before coming up, because the Dixie is still needing to move up. And this is just the exact same story with Bitcoin. Go ahead, go to the index. Let's close this, give us some more room. So yeah, so we've had this move up. During this entire move up of Fed now, Bitcoin has been in decline. Now the question is, are we going to really come all the way up to here? Or is this going to be a top? Or is this going to be a top up here? Or is this going to be the top? That is the question. So with Bitcoin, we could see a couple of things. We could see, as this thing is still moving to the upside, maybe it falters a little bit inside of here. So maybe we get a little bit before we continue on. And if that happens, then we could see Bitcoin make a push up and then consolidate while the Dixie is still pushing its way up. So while Bitcoin is consolidating, maybe even dipping down, halfway mark in between here, and then starts to continue up as this starts to come down, and then this thing really gets on moving. So that is, you know, my macro thesis right now is that's exactly it. That's what it is. That's what I believe it's going to be. So let's go ahead and get into, well, first of all, I'm going to take a quick break, but I will be right back. I haven't even been going for an hour yet, so maybe I won't take a break. All right, I do want to change this layout for the YouTube video's sake that I'm going to edit and upload. I've got to finish this segment out like this. If you enjoyed this video, please consider hitting that like button and subscribing to the channel if you are new. Hit that notification bell to be notified for whenever I create new content and when I go live. As always, this is not financial advice. I am not a financial advisor. Please, please, please do your own research. We are here just to educate. And yeah, join the Discord. Link is in the description box down below. Thank you for watching. I love you all. Peace out. Let's go. Okay. All right. Now we're live again. All right. With that, I will put on some beats. Do I still have that other one open? No? Dang it. We're going to go to royalty-free music. We're going to do... I don't want to have to log into anything. Oh, starting from 99. Any of you guys know of any? Well, none of you are in here, so. Trending music. I don't want trending. I want to dub it up. Alright, let's just do Wake Me Up. I will be back.
Never stop dreaming. Never stop. Never stop. Never stop dreaming.
Alright, guys. Alright. I'm back. Let's get back to it. Alright, so let me bring my face back on here. Alright. Let's start. Let's actually continue where we were. Alright, so let's go back to this, and I want to go over this. So refresh. I was saying Fed now will bring markets down initially because of the influx of capital, the unlocking of capital, pushing a velocity of money, increasing the demand of the dollar, which is why we got the push up. Ever since Fed Now has been released, we've had this push up, and I believe that is because of a demand for the dollar so that they can take that dollar and put it into risk assets to give us our final push up on the Dixie, or not the Dixie, on the Dow Jones and the rest of the indices, giving us new all-time highs before rolling over and having a decent correction. And like I was saying, I don't believe, or I don't know if that correction or if Fed Now and crypto can save us from having a Great Depression style crash, simply because of all the capital that will be more free flowing. So that means markets could move quick, and you've got to be up on your toes. Got to keep your head on a swivel and just be in, day out, paying attention. All right, so let's go back to the video. So what do we have to come back and test? Now, I want to go ahead and skip forward to Bitcoin. We got it. We got the 25. So essentially, I compare this to the 2017 bull run, where it was just a constant, up, down, up, down, up, down, up, down, up, down. So I was trying to make that comparison here. I even said that we could see it go stagnant here. If I can bring it up, let's see, where do I show it going stagnant a little bit? I know I had it in here. Maybe this was, let's see. Yeah, this is where but anyway, so we're going stagnant. Now this is the Fed Now release, which admittedly I did get wrong as far as this goes, but I was being very, very cautious as I was explaining this in this video to say I don't know, or really kind of even expect it to look exactly like this, because it's just not likely for that to be the case. So Push up, pull down, push up, pull down, push up, pull down. That's what we do in bull markets. All right. Let's go over here. Yeah, you got Fed now stuff. So now I am going to be moving over, and we're going to be going over, let me pick a different chart. Let's just go to the index chart. Let's do the Coinbase chart. Yeah. Just get rid of all this. All right, so I want to go over Casper SMCs. I want to break it down, his latest strategy that he shared, because in my opinion, it is an excellent strategy. Now, the first thing you've got to do is you have to break down the time frames in which you're going to be trading this strategy. So I'm going to go ahead and type this up. I don't think you had the 1 month on there. 1 week. 1 week. For the 1 week, what are we going to go down to? The 4 hour, the daily? What do you think? Well, I can go ahead and go over into the Discord. I think I shared it in there. Maybe not. I mean, I know I shared it, but am I going to be able to find it? Boop, 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 boop. Because it would be much easier if I could just copy and paste the, what you call it? The picture of the time frame. There it is. Copy. Copy, 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 copy image. And then paste, 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 paste image. There we go. So now I don't even have to type all that stuff out. All right, so this is screen grab. So this is what we're working with, okay? So you're only going to be working with 2 different time frames at once for this trade setup, okay? Now, first thing I recommend you do, let's shrink this. Well, let's take this off. First thing I suggest you do is you go over first go check out Casper SNC's video and then watch this one, or vice versa. It's going to be the same concept. But anyway, yeah. First thing I need to do is, oh yeah, the sessions. So a lot of this, or this whole strategy has to do with sessions. Now I recommend getting this one. This indicator is called ICT kill zones, comma, sessions, and indices. And I'm going to go ahead and turn off the Asia market because we don't need it for this. Now, on your higher time frames, anything that's 4 hours, anything that's not below 1 hour, you're not going to be able to see the sessions. So I highly recommend that you learn them. I'll also highly recommend that you come down here. Let's see, you can't see because of me. Let me just move me over real quick. Down here, right here, where your time zones are, click that, and then click on New York. Get to know your New York times, okay? It is important for this strategy. Get to know your New York session times and your London session times per the New York time zone. So that's what you want to learn. So let's go ahead and get into that. So obviously, so the 4 hour, what you need to know is that the first part of the strategy is that you need to take out price on the higher time frame needs to take out a high time frame swing level. Swing levels, what is that? So right here, I can just go ahead and go like this, and I can see all of the major swing levels in here on this time frame. This isn't quite a swing level yet. No, that broke. So this became a swing level. So but this isn't a swing level just yet. They did break that high. We do have a pullback. So yeah, that could be a swing level right there. So yeah, but so your swing level is going to be, okay. So you have a push down, right? And then you have a push up, and you create a market structure shift. And then once you break that level down there, that is when this right here becomes a major swing level. So I'm sure there are also indicators that can show swing pivots, ping swivets, high, low. Let's see what this shows. So yeah, this shows you your swing points. It considers this a swing point for some reason. Swing, 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 swing. I'm not sure if I would go with this indicator or not, but let's see if we can find another one. Let's see. Swing points. Or nope. Swing points. This one, highs, lows, and candle patterns by Lux Algo. Let's see what that one is. I don't really care for patterns. Let's see if I can. It's not okay. So bullish engulfing. So this is, so the higher time frames this isn't really going to pick up on. So we're going to find us an indicator that will show us what we want. Let's just do swing, high, low, support, resistance. Let's see what that is. All right, maybe we got something here. Let's take our path tool, and we can draw out the different swing points that I already drew out. And you see this one got taken out. And what that is that's a market structure shift. So after a market structure shift, and this comes up to this high, you want to see a pullback down into a fair value gap before you make the next move up. And that is exactly what we got. And then now we've got some consolidation really within a range that I am hoping breaks to the upside eventually. Maybe we crab along here for another few weeks or so, and then we can get that push up out. That is what I'm looking for from a macro standpoint. But let's get back to the strategy. So the strategy is high time frame is what we're going to be looking at. Now your higher time frames up here, your weekly and your daily, that's going to be more for your swing trades. Okay. For those of us that trade daily, we're going to not want to look at anything that is smaller or higher really than the 4-hour macro. Let me zoom this out because I need to bring this over here. All right, let's go to 4-hour. Here's our picture. Here's our 4-hour. And I can actually show you guys a trade that absolutely nailed this. Let's see. Let's make you smaller so I can. All right, so this was the trade. And let me go ahead. All right, so my sessions are not going to show are not going to show because I don't have it on the low enough time frame. So I'm going to go ahead and put my lower time frame on, and I am just going to show I'm just going to do this session right here because I want to show you the trade that I took. All right, so we've got this session right here. So that's part of the sequence of events, the rules for the trade. So let's go back to the 4-hour. Let's move this over here so we can see. All right, so the first part of the trade is the high time frame takeout. So what does that mean? So on the 4-hour, what did we have? We had this high time frame takeout of this level here. We took out that level there. Okay, so we got that bullish breakout. Okay, the next thing that you are wanting to look for is once you get that breakout on the higher time frame, okay, what you want to do next is go down to your 15-minute chart, because this is a 4-hour break, and a shift of structure. So once we have that, we want to come down to the 15-minute, and we want to find a fair value gap that occurs within this session, within these two sessions. We want to see displacement, I should say, that creates a fair value gap within the session, not afterwards, within the session. What do we get? We do get the displacement. That's that big push down here. And we do create a fair value gap on that displacement. So I can drag that over. And then this is where you take the trade, you mark up the trade, and right now this is going to be a short trade because we are coming back up into the fair value gap. So we're going to come over here, we're going to put on a short position. We're just going to go from the start of the fair value gap. We're going to go to the highest high. We're going to go to that swing point high up here, and then we're going to do a 2-to-1 ratio. So win-loss ratio. And then we're going to drag this out. And then you do see that it takes a couple of days, essentially, and then we finally get that breakdown. Now, if you're brave enough, you could have held it for even longer to take out these lows over here, which I would have suspected because actually, one thing that I do love about this indicator, I know this indicator actually. Actually, this might be a different indicator, but it's reminiscent of the Lux Algo one. But you see all these blue lines down here? So that is showing, to me, liquidity. So if I can draw this across here, liquidity / support, okay? So if I can draw that across here, and I can even add in these blue lines over here because there's just so many of them all in the same zone. So that tells me that there's liquidity there. Did we come down this far? We did come down this far. So, and this is almost all blue. You know, I can even take out this little red one right here, and we still have all this blue liquidity down here. So, theoretically, take profit 1 and maybe let the rest ride down to your liquidity zone, and that is a nearly 7% if you were to write it down to this liquidity zone right here, down to this low right here. Then you've got yourself a nice 8.6 move at 5.23 to 1 ratio. Now this, like I said, this right here, doing the 2-to-1, that really just, on this strategy anyway, that just really takes out the emotions of it. You don't have to watch it. You can just set it and forget it. Also, manage your risk properly. Realize that your stop loss is a whole 1.64%. Okay, so what that means is that when you enter here, right, you have 1.64% of drawdown. What can you afford to lose on that drawdown? Say you do $100 trade. You enter $100 on this trade. Okay, are you comfortable making $3.27? Risking $1.64? Or are you going to add leverage to that? And let's just give it 3x. So are you comfortable risking 3, 2, 3, 4, 5% essentially for 10%? It's 2 to 1. So are you comfortable with that? Are you comfortable with putting just a 3x? Okay, are you comfortable with losing around 5% for an opportunity to gain 10%? Well, if you can back test this strategy, follow all the rules, only do 2 to 1, this strategy will work most of the time. But do your own back testing, do your own research, go watch the Casper SMC video on this so that you can get a better understanding of it, and also watch his other videos just so you can get even better understanding of it. So yeah, but that's going to be it for this one, guys. We'll go over this in more detail at another date. Do some back testing together. Members were not able to join the swim lesson today, and that is fine. We will get it done another time. I'm also, just so you know, I am changing it up to social workshops interpreting markets because I have members, Discord members, that would like to participate but can't during the hours that we are currently doing them at. Now, I say currently, that doesn't mean I'm going to change. I do plan on doing this every Sunday because that is when the family goes to church, and I stay home and I do charts. That's what I do. I'm just not. I'm not a church person. I don't like church. That's just me. But anyway, so yeah, I stay home and I do this stuff. And I mean, also just before I go, just look at this liquidity here. I mean, it's all under here. It's all being built up under here. And another good example of this is XRP. After it pumped, not even made a post about it. I was like, would you be comfortable with seeing something like this? Which was essentially me saying, let me get off that drawing tool. Which was essentially saying, would you be comfortable with seeing this move and then this coming down and taking out these lows and then moving higher? Now, I actually had it going lower, like coming down into these lows, which still could very well happen, especially if Bitcoin gets going and starts drawing dominance away from the altcoins. But that's a wait and see. That's just, yep. That's all I got, guys. I hope you enjoyed it. I'm going to turn this into a video, but yep. Hope you enjoyed this video. If you found some value in it, please hit that like button. If you are new to the channel and you found value, hit that subscribe button. And hit that notification bell to be notified for when I go live and whenever I drop new content. I love you guys. Thanks as always for watching. Join the Discord. It's free. Description or link in the description below. Follow me on Twitter at Lunar Beaches. Shout out to Quantum Divergence and Alexo Crypto and my beach club guys, my unaware wolf, my moose, and my sniper. The wolf and the sniper better, or the wolf and the moose better look out for the sniper. That's all I gotta say. That's gonna be it, guys. I love you all. I'll see you guys in the next live. In the next video. Peace out.